So today we saw Tesla stock basically flip and capitulate in price action. Now in yesterday's video, I highlighted that this Friday was going to be a huge day as there was a lot of macroeconomic data coming out. However, we ended up getting a ton of news in regards to Tesla that completely changed everything. For example, we saw Tesla drop prices on its Model S and Model X model. And when you look closer, we see that the Model S and the Model X had price drops of around 15 to 19% in the United States. And so today you could get a Model S for a base price of $74,990, which is $3,500 less than yesterday's price, or a Model X for $79,990 for $8,500 less than yesterday. But in addition to that, we also got full self-driving prices dropping down from $15,000 all the way down to $12,000. Now this is all interesting because we've heard Elon Musk in the last earnings call say, hey, even if we sell our cars at lower prices and lose out on those profit margins, we could still make up for it in FSD subscriptions. However, now we're seeing FSD prices drop down, and so that's a lot of concern. And so while all the Tesla bulls are extremely excited about the new models coming out, we have to go ahead and break down why the price drops in these two models plus FSD caused a lot of selling pressure for Tesla stock today. And so here's the thing, guys, with Tesla shares rising up in recent trading days, profit taking has been exacerbated by shrinking margins. This is because when you cut prices, you inherently compress margins, assuming all factors remain constant. The expectation is that increased sales will offset these slimmer margins. And so in simple terms, you may earn less per item, but you're aiming to sell more at a reduced price. And so beyond just volume, there's other potential pros, such as production efficiencies that come with scale. However, the strategy is not without risk. Lowering margins can negatively impact your bottom line, and of course, the timing matters. Because if you reduce prices leading into an economically challenging period, it could be a strategic move, right? It's like choosing the lesser evils. This occurs when you acknowledge that you can't maintain higher prices due to weaker consumer demand. However, if done correctly, this could boost in sales that make up for the loss in margin. But here's the thing, guys. The last time we had the earnings for Tesla, one of the main reasons why we saw Tesla sell off tremendously was because investors were not satisfied with profit margins getting slimmed down. And so although this is a strategic way to go ahead and stir up demand in a declining economy, the matter is that Wall Street is very myopic in the sense that they look at everything from quarter to quarter. And so this happening right before third quarter earnings doesn't really look too good because, of course, investors are not trying to invest in Tesla in the last 5 to 10 years. Wall Street looks at everything, again, from a short time period, and they want to make sure that they're getting a return on their investment at these prices. And so if things are not looking good for quarter 3, well, they may go ahead and trim off their positions. And so this is why when I was asked if we were in a bull market, I said, no, we're in a cyclical bull rally in a secular bear market. Now, the reason I said that is because it's very obvious that we're seeing a lot of weakness in the consumer pocket. I mean, why else would Tesla continue with reducing prices? Well, of course, it's to stir up demand and, weakness for the consumer pockets. In fact, I've been talking about this on this channel and also with the Push and Profit private group for a while now. In fact, a few months ago, back in April, I shared a chart showing how bankruptcies are increasing at a fast pace, and it's resembling the same pace that we had back in 2009. Now, of course, this isn't a good sign because what did we end up seeing in 2009? Well, that was the great financial crisis. And so when you're seeing bankruptcies rise up to the same level of what it was back in 2009, well, that's not necessarily a good sign of the economy. In fact, a couple of weeks ago, I was talking about Walmart and how it relates to Tesla. And I know a lot of people in the comment section were very upset with me talking about Walmart's earnings, how it doesn't really have anything to do with Tesla. But I wanted to point out that we saw that Walmart CEO says that value will prevail in an economic slowdown. And what he was saying in that earnings for Walmart is that, hey, we're seeing a lot of individuals that typically shop at other chains such as Whole Foods, Target, etc., whatever popular grocery chain is in your market, and they're all heading towards Walmart. Why? Not because Walmart has high quality food, but because Walmart has really low prices. So consumers are being more aware of their finances, and of course, when people are aware of their finances, that is not a good sign, right? When people are blowing money stupidly, that's when the economy is doing well. In fact, a couple of weeks ago, I shared how Americans' credit card debt hit a new record of $1 trillion. Again, this shows weakness in consumer pockets. So when Americans are having to rely on their credit cards, that's not necessarily a good thing. But along with that, in a separate video, I talked about how Dick's Sporting Goods is blaming theft problems for a huge decline in their profits. And again, I got a bunch of people mad at me in the comment section for talking about Tesla stock, but then also talking about Dick's Sporting Goods and how their earnings were doing. But the reason I talk about this is to really highlight what's going on with consumer pockets, because here's the thing. People generally don't turn to crime unless they're in bad shape. People don't steal things for fun unless there's a problem. Unless you're a kleptomatic person and you do it like that, well, okay, well, that's just an internal problem. But generally speaking, people don't resort to stealing unless their pockets are hurting. And with that said, just yesterday we had Dollar General say that they expect to lose $100 million due from people stealing their inventories on their shelves. Again, highlighting the problem. When individuals are stealing from the dollar store, that doesn't show signs of a good economy. This is why I recently tweeted that even though the probability of the Federal Reserve attaining a soft landing seems to be growing, the leading economic index has fallen for the 16th consecutive month, which doesn't show too much of a good sign for the economy. And this is why a multitude of different times on the channel, I talk about what's happening in the economy, and I share with you guys economic data, and then go ahead and tie that back into the markets, and then tie that back into Tesla stock, because at the end of the day, you have to understand what is currently taking place. And so even though Tesla is revealing new models, that's still not bullish enough to really push Tesla stock forward. And you guys see that reflecting in today's price action, basically showing you guys that there's other concerns with weakness in consumer pockets. Now, I want to go ahead and break down some of the economic data that we received today, but before I go ahead and break that down, make sure to look into the comment section of this video, because there's going to be a pinned comment that has a link to my free weekly market post, where every single Sunday I talk about what we should pay attention to going on in the overall markets. And so every market participant, regardless if you're a trader or an investor, it has some information that you should be aware about. And again, it's completely free, so check out that link in the comment section below. Now, looking at the job data today, we saw that the United States unemployment rate did rise up to 3.8%, which is the highest since February of 2022. Right? Now, I want to remind you guys that we are in this unique situation where bad data, like seeing the unemployment rate actually tick upwards, is seen as a positive catalyst, event for the markets. And the reason behind this is because the market is still worried that Fed Chairman Jerome Powell from the Federal Reserve is going to hike during the September meeting. And so by seeing the labor market loosen as he wants, well, the market's more optimistic that he won't hike in September. We also had the United States non-farm payroll employment data, and we saw that it actually came in a little hotter than expected. However, we saw that the last two reports were revised downward significantly, so it's not too big of a concern that these numbers did come in hotter. But I want us to point into a different section. I want us to take a look at the temporary help employment data, because we're seeing that temp help, right, a lot of the companies that hire people to work temporarily for other companies, is actually going downwards. Now, this is an indicator that jobs are actually contracting. This is like a leading indicator. But with that said, after looking into the job data that came in today, I want us to go ahead and hop into my laptop so we could take a look at Tesla stock and break it down from the perspective of a long-term investor and someone who's also trading Tesla in the short term. Alrighty, so we are officially in my laptop and we're taking a look at Tesla stock, as there's a couple of topics that I just want to retouch on that we talked about in other videos. So what is that? Well, it's this area right over here, right? In previous videos, if you guys have been watching, I said we want to watch out for Tesla at around this area. Now, why did I say that? Well, one of the main reasons I pointed out was that, hey, there's a lot of volume relative to price. Now, that's on the volume profile. Volume relative to price is completely different from your traditional volume relative to time. And I said that when there's a lot of volume relative to price, that means that there's a lot of exchange between buying and selling. And because of that, that creates these key levels where there's supports and resistances. And I said, we want to watch out for Tesla over here, because we may get rejected here, or if we do break above it, well, then Tesla could go up higher because there is low volume relative to price. And what did we end up happening or seeing? Well, we saw that Tesla ended up getting rejected. Now, did I think that Tesla was going to get rejected this hard? Of course not. I don't have a crystal ball, and so I could not anticipate that Tesla was going to drop the news of further price cuts and cuts in FSD, right? I just said in previous videos that, hey, we just want to watch this area. Now, again, I often say technical analysis, when you're looking at a stock from a technical approach, it's not to predict the future. Of course not. It's just to measure some things that you want to watch out for. And so I said, yeah, we want to watch at this area. We could get rejected, and if we do get rejected, well, that's a little bit concerning because we may start going further down. And I said if we do break above it, well, then we want to watch if we break above this descending trend line. But again, I didn't say that we were going to go into all-time highs, as I still am, slightly bearish on the overall markets. Now, I do want to clarify that oftentimes I do come off as a bear, but I am bullish for Tesla in the long term. I have exposure to Tesla in my long-term portfolio, and I also have a short-term trading account where I trade Tesla and try to profit off the fluctuations of price, regardless if we're going up down or up, regardless which direction, right? But for the long-term portfolio, all I simply do is I wait for Tesla to fall down, and then I wait for that area of confirmation going upwards, and that's when I add in. Now, it's not that you can't do any other approach. There's other options where people like to dollar cost average an equal amount every month, and that's fine. I like to do a lump sum, and I like to buy when there's a dip, but not necessarily just when there's any dip, right? Because you often hear people say, oh, buy it, it's a dip, it's buying, it's selling off, just go ahead and buy. But I like to wait for things to really show that it's bouncing upwards, because you could catch what's called in the markets a falling knife, where you see things just continue selling off. And so what did I do for my long-term portfolio? Well, I saw Tesla stock kept selling off. I kept selling off. And eventually, once we bounced off that 215 area that I talked about in months prior, or I guess it was 1 month prior, I saw Tesla pretty much confirming that it was bouncing upwards. I added it into my long-term portfolio at around over here, and Tesla moved up. And so what is the approach going forward? It's not going to be any different. The approach is very simple. We start seeing that Tesla's selling off. Well, wait to see when it ends the selling and start showing confirmation of an uptrend. And I'll go ahead and I'll dollar cost average in a lump sum that way. Is that the approach that you guys have to do? Of course not. You guys should always do whatever you see value in. You shouldn't invest in any way or trade in any way based on anyone's opinion, and only do whatever you see value in. I always try to emphasize that, because you definitely have people that will copy whatever I say just for any odd reason, right? You have to understand that you have to do your own due diligence. And so that's the approach for Tesla. I think as we get into 2024, things aren't going to be as bad. I do think the third quarter, we're going to see a lot of misses for earnings, not only for Tesla, but, not Tesla, but I mean for a lot of other companies. We saw a lot of hits and misses, but I've been stating that going into the third quarter, it's going to be more misses. And so that's something we want to watch out for. Now, as someone who's trading Tesla in the short term, what is it that you want to watch out for if you're trading this? Well, we already got rejected at this area where there's a lot of volume relative to price. We know that around over here, there's less volume relative to price. Well, what do we know when there's low volume relative to price? Well, if there's selling pressure, it's going to just capitulate. And if it's buying pressure, well, it's going to pump upwards. In fact, if you see when there was buying pressure over here, when there was little volume relative to price, we pumped upwards. Now, when we're at an area where we're approaching a lot of selling and there's little volume relative to price, what do we see? A lot of selling. And so that's something that I'm going to be mindful of. We're going to obviously want to stay data dependent of all the upcoming data. For example, we have the CPI report coming out soon, and that's going to be the next report before we have the meeting on September 20th from the Federal Reserve. And we hear what is the FOMC rate decision, and are they going to hold? Are they going to hike? Are they going to pause? I believe that most likely, because of the data that we're seeing, that they're going to... Sorry, I apologize for that noise. But I believe that they're most likely going to pause and not hike rates. Now, of course, we're going to have to see what ends up happening, but that's just my belief that it wouldn't make sense. Although I did say the next meeting, there is still a possibility that the Feds may try to hike and put their, their boots on the neck of inflation. But for September's meeting, I don't believe that they're going to hike, and that's the stand that I've been pretty much firm on. But with that said, I don't want to make this video any much more longer than it needs to be. Hopefully you guys found some utility in this video, and I'll see you guys on this next video right over here. Take care, guys.